What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers up here on the left. We have the broad market comprised of SPY, the Qs, and IWM. After that, we look at some companies. We have Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, Microsoft, and Amazon. A lot of those companies did report earnings this past week, so that should be interesting to look at on the charts. And we do have Nvidia and Alibaba coming up shortly. If you're interested in receiving 5 to 10 swing trade ideas per week, then go ahead and sign up at the first link in the description for our weekly newsletter. It goes out Sunday nights, just to give you an idea of some stocks we see potential in. We're also on Instagram if you want to check us out there. It's at tradebrigade.co. And we do have a live Discord if you want to chat with myself and other traders in real time. Starting off, as always, on our SPY weekly chart, you can see that we were wrong in last week's analysis. We did chart our monthly chart last time, which led us to an inverted hammer candle forming here where we had this large tail, if you can imagine what the monthly would look like, closing down here at the lows of the month. So our monthly analysis was bearish. Our weekly analysis was bearish. However, this week, obviously, we have a bullish engulfer where we took out the entire range of last week and closed all the way up here, pretty much at all-time highs. So that being said, when what we expect to happen does not happen, it just fortifies the argument in the other direction. But one thing to note here is that we are immediately seeing some resistance at the all-time highs. We have this topping sort of wick here. And another thing to point out is that our volume, although it's relatively average, it's not high by any means. It's not like we saw some huge surge in buying. A lot of this was obviously due to gaps, which we will look at when we chart down to the daily time frame. But I do just want to point out, I'm not thoroughly convinced that we will see another move like this huge, multi-week run that we had in the past here. I don't think that we'll see something like that just based on this candle. It took a lot of effort to get prices back to where they were. I think that we want to see some sideways consolidation really before we see any sort of major move to the upside, again, being signaled by the wick to the top and lower weekly volume. So dropping it down to the daily chart just for some more clarity here, you can see our new all-time high at 334.20 just about is marked in. If we break out higher than that, then we'll be in blue sky territories, as you can see when I scrunch up the chart. So that's whole and half dollar resistance, as well as any intraday levels that do form. But I think, again, we see some sideways action just sort of chop around in this resistance zone that we've sort of built for ourselves. So anywhere bouncing between 333 and 332, just sideways action at this all-time high sort of area. If we break down below the low of this candle here, which is at 330.67 just about, then this gap in the chart should fill. And again, there are multiple gaps that have formed now. We have gap 1 here and gap 2 here. If this historic support, which, now that we're above it, breaks down at 327.50 just about, then we would target the high of this candle as well for the gap fill further down, which is at 326.16. That being said, there's plenty of support in this area. Our 50 SMA did not break, so that being said, we did not target our 200 SMA. As soon as we saw this move to the upside here on Monday morning, we should have taken that off the plate immediately. Although we did have a wick, we would have been retargeting that 50 SMA on any sort of downward action, but obviously we gapped up throughout the week, backed up to all-time highs, and took back 100% retracement of this downward move. So again, I think the major move here is just going to be some sideways consolidation. Our supports are mapped out, and we do have blue sky territory overhead. So I would change my tune slightly when we're looking at the Qs. That's just because we have 3 just about equal highs here at the all-time high, so 230.44, and that forms what we like to call a pressure cooker, where we have multiple touches to the same resistance point, and when that point gives, it normally leads to a breakout to the upside. So that being said, that would be blue sky territory, whole and half dollars, at resistance, as well as any intraday levels that do form. If we see any sort of pullbacks, though, obviously we have our support to come in down here at 226 just about. Let's just round that one up. And then if we break down similarly to in SPY below the low of this candle, which is at 224.65, then we're sort of targeting this gap fill to happen in the chart. The high of this candle and the gap close is at 222.89. So that would be some downward action. We should see this support act as support if we get down into it. I'm slightly more bullish on the Qs just because of how the action was here. We didn't see as much of a pullback. It wasn't as aggressive, and the move to the upside only happened on one gap here, and then we've consolidated sideways for 3 days now. If we get the breakout, I think it is a bullish thing. So IWM is always the wild card, and we're sort of seeing that here. The major chart pattern that I'm seeing just right off the bat when we look at this is a head and shoulders, where we have shoulder 1, which has developed here, head, and then shoulder 2, which is now developed here. I think we mentioned the possibility of that in last week's video. So that being said, this normally means that we are going to see some further action to the downside. We do have a obviously deeper pullback here, and IWM did not take back 100% of its pullback, as did SPY and the Qs, so we're not nearly back up to this 170.56 high area. Obviously, prices never really got up there. There are some gaps, so if we fill the gap that remains, so this gap was filled on Friday, you can see that by this candle here, but if we give up that 50 SMA early in the week, this blue line, if that fails, then I would target the low of this candle here, which happens to be at 164.16, and if that support breaks and that 50 SMA breaks, then I would target the gap fill to the high of this candle, which happens at 162.93. That being said, we do have support that comes in right around, just below that area, and there's another gap on that chart, which, it has been filled by this break down here, but that being said, we do have support at 162.33. Anything lower, we're at 159.75. To the upside, should we see any sort of, this 50 SMA hold, then we're looking at resistance to come into play sort of here at the high of Friday's session. You can see there's a tiny little top wick on this candle that's right around 166.31. We'll mark that one in. And then we have a gap fill that could potentially happen to the upside, which is to the high, low of this candle at 166.76. And then our resistances are mapped out for us. So this level here is very key. Obviously, that's where shoulder 2 formed. That's at 167.89. And then our high up here right around 170.56. If you guys are enjoying the analysis so far, then leave the video a thumbs up. I genuinely would appreciate it, and I think the YouTube algorithm would as well. We recently hit 1,000 subscribers, so I'm super thankful for every single one of you guys. Let's see if we can get this video to over 100 likes. That would be a very big milestone for the channel, but let's see what we would get. Alright, so hopping right into Apple, you can see that we've essentially just chopped around. Earnings didn't really amount to much. We had some good volatility that day. In sense of the option premiums were all jacked up and volatility was pretty high. But you can see we haven't really made it anywhere. We've essentially consolidated up here at the highs. We pulled back with the market into our support trend line. Great buying opportunity there on Monday when we got into that level and then started to pull away from it to the upside. Continued to follow the market to the upside. However, we didn't make it to a new all-time high. So that's noteworthy that we didn't quite get all the way up there, even though the Qs, essentially the NASDAQ, essentially tracking tech, did make equal highs. Apple didn't quite make it all the way up there. So let's see if we can get there this week on any sort of target to the upside. That's at 327.85. If that breaks, obviously that's blue sky territory, $1.50, and any intraday levels that do form. We have sort of this red hammer. You can see there's a tiny tail on it here to the downside at a support level. So that should, in theory, amount to some buyers stepping in around this levels, pushing prices higher. If we get any breakdowns, though, we are looking for support to come into play sort of here, where we had some historic price action, if you will. Price got rejected here, sort of, a lot of data points around this line, and that sort of coincides with our support trend line, this white dotted one. So if we see a further pullback into that, that might be viable, and expecting a move again to the upside. If that breaks, though, we do have some cleaning up to do on this chart, but for now, we have a support zone sort of where these equal highs are in here. That area is right around $300. Our 50 SMA, this blue line, should start to catch up with that throughout the week, so that should form a super support if we get down into it for any sort of intraday bounce. If that one gives, our next one below is at 293.85, and then further down from that, you can see there's sort of a wider range before we see a lot of data points stacking up again, and that's at 282.65. So Netflix we did call out as being relatively strong to the market, and exactly what we sort of thought was going to happen happened. We saw a nice bull flag consolidation, nice hammer there on Friday, and now we had a nice move to the upside. Right now we're seeing sort of a topping form here, which is to be expected after you see a nice expansion of range. We see some consolidation, and we do see this support happening here at 361.79, so that's very key. We see this double bottom. We really don't want to see that break down. If it does, then it might put us back down into sort of where all of these data points are, if you will. Prices tend to get sucked down to where there's a lot of time spent or a lot of value added, so all of these data points stack up, and this could act as a magnet here around 343. So that should happen, or if we see a breakdown below this 361 level, but if we see some sideways consolidation, maintain this level, the next leg up, we would be targeting 386. Based on this level here, and we would have to break our high, our recent high here at 375.52. Tesla is just looking so odd because of the way it's been parabolic. If we look at the chart like this, it's just been out of control. A lot of people made a lot of money this week. I have not been partaking in Tesla. It's just too expensive. You can call me a bad trader. You can call me whatever you want. But I think that based on what we're looking at here, it's obviously way pie in the sky right now. This is not a viable buy up here, way up here, but we do have this support trend line that's sort of been stacking up. We have support sort of in this general zone, if you will, that's right around, let's just call it $700. You can see price sort of bounced off of there. That's where we opened and skyrocketed up from this day. So if we see any further pullback into this white trend line, then maybe Tesla has cooled off enough, but for me, it's just one of those things. Unless I'm scalping it intraday, there's no reason for me to be in this thing overnight. Obviously, huge volume here, all-time high up here at $968.99, so that's absolutely absurd. On something like this, I would sort of just expect that the full move to $1,000 happens. So it's kind of mysterious to me that buyers didn't want to see that nice round number, $1,000, as resistance. That being said, it could be a potential target to the upside should we see some sideways consolidation and a second sort of parabolic move come out of Tesla. Anything really to the downside, we have a few gaps remaining below. If we break down below this sort of low of this candle, which is at $673.52, we target this gap fill here to the high of this one, and that is at $653 even. And then we have this gap, which remains below as well, but that was between 318.87 and sort of the high of this candle, which is at $589.80-ish. So those are some targets to keep in mind to the downside. Again, that's if we get a violation of this white dotted trend line. Until it gets down in there, I would think that it's still way overbought. Volume is starting to taper off drastically. Let's sort of see and keep this one on watch throughout the week. Alibaba has not quite made it all the way up to its high, as did many of the markets like we were looking at in SPY and the Qs. Notably so because it's a foreign Asian company. Coronavirus has impacted it significantly more. We do have a hammer candle here on Friday, though. Large gap that was filled to the downside, but now we have a gap to fill to the upside. So if we break out over this 218 level, then we're targeting the low of this candle for the gap fill, and the low of that is at 219.78. So keep that in mind. If we see any movement higher than that, we're looking for resistance at 222.60 and then following that at 225.86. The hammer here would lead me to believe that we want to see some upward action, but again, the market does have to align for that to happen. To the downside, we have our 50 SMA, which will start to coincide with this support level here. You can see it was support, and then resistance once we were below it, sort of resistance. So that level is at 213.14. 50 SMA will be coinciding with it for a super support. If that breaks, we're looking for another one to come into play down here at 211. And then if that breaks, we're seeing some more chop, in which case we're targeting a further support a little bit further down at 204.77. Facebook, similarly, earnings gave it a huge gap down, and right now we are still not nearly up at the highs as are most of our indexes, as we had talked about. That being said, we have sort of a double top that could potentially happen here, where we got rejected this day, and we see a baby little topping tail on our candle on Friday. That being said, our 50 SMA is sort of supporting us. You can see this sort of curling action here with the lows. If we break out over this 212.79, we would target our next level up here, which is at 218.09, and that level is pretty vague. It might be somewhere closer to where this confluence of support and resistance trend lines happen, which is slightly higher, anywhere around 219 to 220, which sort of coincides with our next resistance past that one, where we have a lot of data points stacking up here. So I would probably target that to the upside on any sort of major move over this double top here. Again, if we pull back, we're sort of covered on supports. 50 SMA should act as support on any sort of touch intraday, 208.33, and then lower than that, we have sort of these chop zones between 205 and 203, and then lower than that is 195.09 and 191. Quite a ways away to the downside, but always a possibility. Nvidia is also looking a little bit head and shoulder-ish, if you will. You can see we have shoulder 1 potentially forming here, head, and then shoulder 2, depending on if we break out over this resistance trend line, which this just goes to show the power of trend lines. We had this support trend line. Once we broke down below it, it acted as resistance, and now it's acting as resistance again. So trend line analysis is powerful. Anyways, if we see shoulder 2 develop here, then we're targeting our support level down below, which is at 241.26. Anything lower than that is the 50 SMA or 232.07 based on some of our historic support levels here. 1, 2, 3, 4-ish touches to that level. And then our sort of last ditch effort where we have these stacked up resistance levels, that's at 228.85. Anything to the upside, we are looking at our high swing high resistance up here at 259.50. And then over that is 266.47. That's a historic resistance, which should act as a first touch resistance. I know I'm saying that word a ton here, but intraday, look for a pullback off of that level if we do make it up to it. Microsoft is looking great. It looks very similar to the Qs in the sense where we have a gap up and then we have some equal highs up here. So sort of a pressure cooker. It's not as good looking as the one on the Qs just because we have this piercing wick to the top side, which acts as, just another hurdle that we have to get over if we do end up breaking out over this initial trigger point here at 184.17. So that next point and the all-time high would be 185.63. If we break out over that, though, we're in blue sky territories. As always, it's whole and half dollar resistance, as well as any intraday levels that do form. If we start to pull back, again, this is an inverted hammer candle here, which indicates that there are some sellers hanging out. That being said, we are going to target the low of this sort of range here, and the low happens here at 176, just about 176.30. If we break down below that, there's a gap to fill here to the high of this candle, which is at 174.50. And then sort of this next support comes into play around this level here, which I don't know why we didn't have that one marked off, but now we do. That's at 170, and then another small baby gap that's partially filled below that level to the high of this candle at 168.75. So Amazon, obviously huge gap up. It's holding the gap, which is very noteworthy, and you can see that we're starting to figure out whether or not we're going to break to the upside of this range. It looks like we do. There is some clear resistance overhead at 2098. That being said, if we break out over that, that sort of puts us in the realm of blue sky territories once again here. So whole and half dollars over that level. On Amazon, I'd probably just call it whole dollars and $5 and $10 resistance as well. Those are very important levels on a stock price this high. Any sort of pullback, and if this wick sort of equates to more of a pullback than what we're seeing here, then there's plenty of chop and support down below. Anything between the levels of 2054 and 2040, sort of plenty of support in this general area. Price might get drawn back down to that just because there's a lot of value here. We would sort of have to wait and see how that develops early in the week. If we break down below this sort of double bottom though, and again, this is pretty aggressive. Obviously, huge gap in the chart. It's probably not going to fill in one day. It could, but I highly doubt that. So breaking down below this $2,000-ish whole dollar mega support, if you will, the gap to fill is all the way back down to here, to the high of this candle at 1872. So again, probably not going to happen all in one day, but with the larger range that Amazon's been having recently, it's more than likely that maybe it comes down to 1950, 1975. A $25 range is, that's more than doable in a day for Amazon. So keep that in mind to the downside. Again, based on the action here, the gap is holding, so I'm pretty bullish on it. I would like to see it consolidate and then make another move up. But when a gap of this size does hold, normally it has some underpinnings in fundamental analysis. There are some larger buyers and larger people at play here with larger market stakes. So that's it for this week's episode of the Weekly Watch List. If you enjoyed the video or learned anything, be sure to give it a thumbs up. Again, we're aiming for 100 likes on the video, which will be a monumental task, but if we can get there, I have faith in the trading community. If you're interested in receiving those newsletter swing scans, then go ahead and sign up for that. We're also on Instagram at tradebrigade.co. Talk to me in the live Discord chat. I'd be happy to answer any of your questions there, or you could leave them down below in the comments section. And with that, I wish you a green trading week.